Carley, welcome back to F.A.C.E. Great to have you here.
Thanks, Dale. Good morning.
It's amazing how the time flies.
Doesn't
When
it?
you schedule your
I know.
next appearance, and it's 3-4 months away, and before you know it, here you are again.
I know. You're exactly right. I was just thinking that this morning.
So you always have real nice technical stuff. You want to share your screen, and maybe
Sure.
you could start off telling us about the Moses effect, who I'm calling Paul Moses, coming down from the mountain, laying down the commandment of there must be lower prices. Anything you want to fade? Okay,
Okay.
interesting. We're using the same term in the dollar. One more last hurrah.
hmm
Do you think we
Uh,
did it today?
you know what? The, you know how it is trying to pick tops and bottoms. It's a
Yeah,
tough game. So
yeah,
I think we've got two levels that we actually wrote about this for our clients and for real money last week.
okay,
Either the dollar is putting in some sort of, this is our best guess. I mean, obviously we can't see the future,
right,
but either the dollar is putting in some sort of a double top here, or
yeah,
if some unforeseen news comes out, which I'm not expecting, but it's possible if something surprises the
Geo,
market. Yep. I mean, we could get one more big last hurrah up to somewhere. This is on the futures, somewhere around like 113 or so 113 and
wow,
a half. I'm
yeah,
not expecting that, but anyone that's following the stuff should understand that's definitely possible. Markets can do weird things, but you notice
yeah,
when the dollar tops out, it tends to be pretty dramatic. I mean, here's March 2020. If
yeah,
we go back into some of the other, like 2016, it doesn't just slowly roll over. It's usually some sort of a dramatic top, and this I think could qualify. I mean, the rally that we saw in July was almost parabolic, and then we saw
yeah.
some pretty sharp moves last couple of weeks. So
And
we'll
the
see.
momentum, you're getting
Right.
divergence at this new high.
Correct. This is ironically, this is almost exactly what we saw in natural gas a couple of I guess it was probably several weeks ago at this point. I'm not saying,
Oh,
and
when
that's
they had the fires at the
yeah,
and that gas went down sharply.
correct. It went from like
Yeah,
$10 to $5. Now, I'm not
yeah,
saying the dollar is going to cut in half, of
yeah,
course, but we could easily see 97 somewhere in there. That would be following a long-term. You can see this kind of a long-term pivot line. So moving averages come in here. This is a weekly chart, by the way. So it's definitely not impossible for the dollar to reach 97. I know very few people are looking for that sort of thing, but the reality is, if you look at sentiment readings, we look at like the COT report and a lot of the consensus, like basically polling that shows who's bearish and who's bullish. And it's almost the exact mirror image today as it was when the dollar was bottoming out in 2021. Right here, if you kind of rewind to 2021 when the dollar was like breaking below 90, literally nobody thought the dollar could not let alone rally. Nobody thought it could avoid some sort of Armageddon
I
because
remember that.
the Fed was
Yeah,
printing money. I
yeah,
mean, there was all these bearish stories, and now we're kind of at the opposite. It's kind of hard to find a bullish story. I'm sorry, a bearish story on the dollar. Everything is bullish, which is could be a sign that things are turning the other way. And this divergence is a really big telltale sign. I mean, there's no guarantees, but when you see this sort of dramatic RSI um, disconnect from the futures contract, it's usually a precursor to some sort of reversal. So
I'll give you another piece for your case that you're building here.
okay,
Euro in positioning commitment of traders has the
correct.
largest net short position since February 2020,
hmm
and that was just prior to a pretty big move in the euro and a pretty big decline.
I
And
agree with you 100%.
so,
Absolutely.
yeah,
Yeah.
so I mean, the way it's people are positioned right now, um,
Yeah.
does kind of look like that. So,
No,
okay,
you're right.
great look. So
Mhm.
here, do you want to talk about the euro, or are you
Yeah,
gonna?
so I mean, it's the same general idea, but I'll just point out a few
Okay,
things. Again, remember, like when everybody's thinking the exact same thing is usually when the opposite happens. I remember in 2006, 2007, literally people were refusing to be paid in US dollars They wanted to
Oh,
be
yeah.
paid in euros, and
Yeah.
that's like the euro's hasn't seen $1.60. And
Yeah. I
at this point, we're
remember.
kind of in the opposite situation where everybody wants dollars. The world can't get enough.
Yeah.
That's going to change, and it changes quickly. And as you mentioned, everybody's short the euro, long the dollar. It's actually the one overcrowded trade this year that has not corrected itself. So if you look at earlier in the year, the overcrowded trades were long crude oil, short
Right.
treasuries, and long the dollar, or I should say long commodities, not just crude oil.
Yeah.
The
Yeah.
commodities have mostly unwound themselves, not all the way. Treasuries partly unwound, and then now it's giving some of that back. But I honestly think treasuries will have a round trip and go back to where we started before the war. And jury's out on the currency market, but I think it probably will. I mean,
You're
if we hadn't,
constructive on treasuries?
I am. Yeah, let's take a
Okay,
look at
because
the chart there.
I looked at I use a TLT as a
Mhm.
proxy, and this is what 10-year. This is a
This
note.
is this is the 10-year note future. It's the weekly
Okay.
chart.
Yeah.
Now, if you're familiar with futures, obviously the contracts expire. So anytime you're looking at weekly or monthlies, it means the data from expiring contracts is kind of meshed together, and
Yeah.
all I'm saying is it's not, these types of charts aren't perfect. You have to be careful because yeah, the compute
Okay.
basically
Yeah.
the algos are filling in
Yeah.
data.
You have to be careful.
Yeah,
Period.
yeah. Well, there you go. Exactly.
Yeah.
But here's kind of what I see in treasuries. I mean, to be honest, I'm a little surprised they slid as much as they did here in the last couple of weeks, but this has just been a wildly volatile market. And so it's not that unexpected to see some things get out of hand. But we're seeing the same type of RSI divergence, not quite. I mean, we haven't made a new low here, but it looks
Right.
like it's there's a little bit of upsloping in the RSI, which I think is interesting. But to me, this looks like a reverse head and shoulders. So we're kind of forming the second shoulder, and we'll see how it goes. I personally think a couple things that are happening this week that most people may not have on their radar is the September futures are going into expiration. First notice day is Wednesday. So a lot of this selling that we're seeing here in the last couple of days, I mean, obviously there's all kinds of stuff going on with the
They're
Fed and
rolling
things,
them.
right? So a lot of times when you don't ask me why or how or why it just happens over and over, but usually, not usually, but more often than not, I'll say when a contract's going into expiration, you often see a really big spike in price in whatever the direction the trend is at that point. And then once we get past expiration and everyone's rolled, it tends to go the other way. And so I think that's probably what's going on here. I think everything's just being exaggerated and pulled down by those rolling. I mean, if you can, and a lot of it has to do with human nature. People that are trapped on the wrong side of a trade want to wait to the very last minute to get out. And
Yeah.
so that
Hoping they
tends to
can.
be
I just
exactly.
want to
So
get even.
yes, there you go. That's
You ever
exactly. And
hear
then
that in your head?
yep,
Uh,
exactly. And then
yeah.
and then what happens is they get squeezed out. Like, a couple weeks ago, they were like, well, I'm long, I'm wrong, but I've got some time. And the next thing you know, they're really motivated to exit at crappy prices because they're out of time and they can't take it anymore and that sort of thing. So that happens a lot. So we'll see how it goes, but I actually think we are going to probably hold current levels, maybe slightly below. And then I think we've got a pretty big rally ahead of us in treasuries. Believe it or not, it's another situation where everybody's thinking one thing. And
Yeah.
3.5% on a 10-year yield is better than what we've seen in a long time. And I think people are going to find that with the uncertain stock market, volatility all over the place, it's not such a bad idea to have some in your portfolio. And a lot of people wiped it out of their portfolio earlier in the year. So I think they're going to allocate that back, and that should put us, stabilize us at least, and hopefully put us much higher.
Yeah, I have a similar chart in the TLT, which is 20 years in duration. And where you have the black line coming in at 130, I have a similar line on TLT, and it could rally back to 131, though, TLT, if I just do a measured move on head and shoulders. So
correct.
that's one heck of a rally. And I have to think that I don't know, is it going to be risk off, or I don't know what's going to be behind it.
Well,
What would
that's
behind?
That's an interesting story. This is probably a little counterintuitive, but I actually think so if you look at, this is about when war broke out somewhere,
Okay.
well, it was about in this area. Had we not had the war situation and the inflation scare and all that kind of stuff, we probably wouldn't have seen this size of a move. I'm not saying we wouldn't have sold off, but it wouldn't have been this wild. I think just mean reversion kind of puts us back towards 130, but to be honest, I think we get a little bit of a melt up. Like the Fed's tightening, they're pulling money out. We've got QT going on, quantitative tightening. But if you look at the money supply, it's still really, really high, and people have to put their money somewhere. And so if we start getting some stabilization and inflation, I think what happens is we could get a melt up in risk assets. Well, let's just say stocks and bonds at the same time. I mean, they went down together. They could very easily go up together if inflation kind of levels off. So,
okay. Wow. You covered a lot of ground in 15 minutes.
Well, I try.
And, so if there aren't any other instruments you want to cover, are there any?
Well, it's up to you. I mean, another thing that we've got our eye on is grains. I don't know if there's any grain traders here. But this is a daily chart of corn. It's kind of the same.
Good.
Yeah, they look good. Honestly, I really have serious doubts about this rally, though. I think you see there's like a trend line here. So even if we go another 20, 30 cents, which is possible, I think it rolls over. This is the September contract in corn, which is also going off the board. I have a feeling we may kind of spike up a little possibly and then roll back over. Simply because everybody wants to be long corn because it's worked the last 2 years. Everyone, the commodity inflation trade, all that kind of stuff. But it would take a big fundamental surprise, in my opinion, to get much higher than where we are, simply because the market, for some reason, the grain market has kind of ignored the fact that the dollar's at a 20-year high. Normally, when you'd see the dollar this high, grain prices would be under pressure, and that hasn't really been the case, at least to the magnitude that it probably should be. And so in March, before all of the inflation trade money came in, which is what happened here, everybody just started buying commodities blindly.
Wheat, especially grains because of Ukraine. Right.
Exactly. And so all of this speculative money came in right here, or inflation hedge money, whatever you want to call it. And that's been pulled out of the market. And now we're right back where we started from. But in March, before all that inflation money came in, these were considered very high prices. $6.50, $7 was really high. And now, for some reason, because we saw these $8 levels, we think, people are thinking this is cheap, and it's really not cheap. It's actually very expensive. And so I have a feeling this rally has a tough time getting much above where we are.
You and I remember $2-3 corn.
Exactly. Yeah.
And $4 or $5 wheat and $8 beans.
Right. The problem is, this is a monthly chart. Farmers are just they're too good at what they do. And as technology gets better every year, they get better and better. So this is what we did for almost a decade. We traded between $3 and $4. Honestly, I think we probably lifted the bar a little bit. I don't think $3 corn is something we'll see anytime soon, but $5 corn, absolutely. Sure.
Okay.
Yeah.
4.50
to, yep, exactly.
Well, you have a great feel for markets across the board. And I know some of it's fundamental from being in the business for a while. It's not just all charts when Carley is talking, because she looks at, the other side, just knowing grain history and knowing that farmers can, they're the bravest souls in the world as far as
they really are. Tough business.
They make a commodity trader look like a picnic. So, Carley, your work is great. I know you specialize in options on futures, and I'm sure there's some people in this volatility that, if they want to trade something outside of FX, they would need a good guide for trading options, because sometimes options aren't, it's not great to buy them when they're real puffed up, and you have to maybe spread them and take in some premium. What's the best way for people to learn from you and get in touch with you if they're interested in this kind of trading?
So if you're interested in commodities and commodity options, you can visit our website. It's decarleytrading.com,
Want to show it?
DECAR.
You
Sure,
could show
let's
it.
do that. Okay, let's do it.
And also, Carley's work, she talks about where her stuff is published. She's one of Kramer's favorites when it comes to commodity markets. He features her work quite a lot.
Thank you. Yeah, he's good to us.
Yeah. So there it is.
Yep. So decarleytrading.com, and there's a lot of free educational material. If you just see on the top, you see there's a learn column, and you can watch literally like 45, 50 videos. It's all free. We're a brokerage service. That's how we make our living. We make our living off commission, but we want to make sure that clients, number one, know what they're getting into before they ever put their money on the line. And number two, an educated client's a better client. So we try to teach everybody. And if you're interested in books, I've written several books. If you're interested in commodity options, I've written a book. It's called Trading Commodity Options with Creativity, and it covers everything from base level ground zero to some pretty complex option strategies and how to hedge if you're wrong and adjust if you're wrong or right, that sort of thing.
Okay, well, thank you so much. Great to talk to you again, Carley. And every time you come, great looks and narratives and ideas to consider. And you are my trading warrior sister, and we appreciate you here at ForexAnalytix.
Thank you for having me. I appreciate it.
All right, and we'll talk again in the winter.
Absolutely.
And it'll be here before you know it. It's like a game of winter is coming, which I'm looking forward to because it's going to be 105 all week here where I live in California. So winter couldn't come soon enough for me, Carley.
I hear you. Same in Vegas.
Except when I lived in Chicago my whole life. Except for playing hockey, I could live without it. In fact, that's why I moved to California. I asked my mom, why did we settle here? Because I'm watching the Rose Bowl with 3 inches of ice on my window, and I'm seeing people with their shirts off getting a suntan in January. So anyway,
legit question. That was a legit question.
So at 22, I packed my car and headed to the coast. So
perfect.
Anyway, great talking to you.
Thank you.
And have a great fall trading season and look forward to our next conversation.
Appreciate it. Thanks a lot, Dale.
All right. Carley Garner, everybody. Thank you. And you could join the team in 25 minutes for the morning edge. You're welcome, Steve, Ingmar, Laura. Okay, everyone appreciated what you had to say. Thank you very much, Carley. And remember, don't just count your ears of corn, your pods of soybeans. Count your blessings. See everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.